What if you could buy a piece of Apple stock on a Sunday, or use a share of Tesla as collateral in a DeFi protocol? Traditional stock investing, for centuries, has operated on a fixed schedule. It's bound by market hours, a day or two for settlement, and often comes with geographic restrictions and high fractional share minimums. It's the tried and true method, but it was built for a time before the internet. Enter Kraken xStocks. This isn't just another brokerage account, it's a collision between Wall Street and the blockchain. xStocks are tokenized representations of real-world assets, like popular U.S. stocks and ETFs. Think of them as crypto tokens that track the price of an actual share of a company, backed one-to-one by the underlying equity held in custody. So, how is a tokenized stock different from a traditional one? Let's break down the key shifts. First, accessibility and timing. Traditional stocks are limited to market hours, typically 9:30 a.m. to 4 p.m. on weekdays. xStocks, however, offer near 24/5 trading on Kraken, and once withdrawn to a self-custody wallet, they can be traded 24/7 on-chain. For investors outside the U.S., this is a massive barrier broken down. Second, liquidity and settlement. Traditional stock settlement can take a full business day. With xStocks on the blockchain, settlement is virtually instant. This also allows for true fractional ownership, letting you buy exposure to a high-priced stock for as little as $1, democratizing access in a way traditional brokers often can't match. Third, and arguably the most revolutionary, is DeFi integration. Because xStocks are tokens on a blockchain, they are composable. That means you can use them as collateral for loans, provide liquidity on decentralized exchanges, or integrate them into other crypto-native financial applications. You can't do that with the shares in your standard brokerage account. But it's important to understand the trade-offs. While xStocks give you price exposure to the underlying asset, they are not the same as holding the actual security. You generally do not receive shareholder rights, like voting or direct dividend payments. Instead, dividends are typically automatically reinvested, increasing the value of your xStock. Also, this is a highly regulated space, and currently, xStocks are primarily available only to non-U.S. retail clients in select countries. The move to tokenized equities is one of the clearest examples of how blockchain is bridging the gap between traditional finance and crypto. It's about taking the value of real-world assets and giving them the speed, flexibility, and global reach of a digital asset. Whether you're a crypto native looking for exposure to blue-chip stocks, or a traditional investor curious about the power of the blockchain, xStocks represent a significant evolution in how we can access global markets. With that said, thanks for watching, and until next time.